So now that the housekeeping video has finished, we're gonna officially kick off this webinar. Hello, everybody. My name is Ronald. For the ones of you who don't know me, I'm the regional manager for the DACH region at SeedBlink Group, based in our Vienna office, taking care of Germany, Austria, Switzerland. And today I have the pleasure and honor to speak with Paul Putz, our friend from Danube Angels. And since he's a jack of all trades and doing so many things in his professional life, I'll let him introduce himself.
Yeah, good morning, everyone. Thank you, Ronald, for having me. It's a pleasure to speak to a new group of people. I think we have very common ground with SeedBlink in many things, what we do with the Danube Angels. So, and it's of course great to have this conversation today. Let me start. So I'm already a little bit older, so my intro takes a little bit of time. So my background initially is capital market and investment banking, where I started in the very early days on the floor of the Vienna Stock Exchange, and then moved on to equity trading with a bank. And in '93, I was moved to Prague to establish the investment banking business in the subsidiary there, everything what is now Erste Group. And it was an exciting time in the mid of the 90s after privatization. And I call it still my personal Prague Spring experience. I continued in this field in investment banking, establishing my own brokerage company with Czech and Austrian partners. And after some years, I was cordially invited by my family to come back from Prague to Austria, and I assumed the role of a managing director of a new stock exchange established by Deutsche Börse and Vienna Stock Exchange. It was the aim to establish an IPO exchange for Central and Eastern Europe, which was an exciting experience. It did not work out, so we've been probably too early, not sufficient companies were on the market, let's say, ripe enough for a capital market transaction. Nevertheless, I'm proud that apart from Maria Theresia, who has established one stock exchange in Austria in the 18th century, we've been the only one afterwards who got a license to establish a new exchange. Then after 3.5 years, so all the business was taken back or internalized to Deutsche Börse in Frankfurt as a CEE segment, and the subsidiary was dissolved. So I was invited to move to Frankfurt and to head this segment. So Frankfurt, I like to be in Frankfurt, but I never wanted to live there. So I politely declined and started my own consulting company. So, and since then, since 2002, I'm active in many fields of consulting and financing, capital market advisory, structuring corporate bonds, working with IPOs, always with a focus on Central Eastern Europe and formerly also Russia, which since 2014 ceased to be a business, of course, because cross-border finance was just away. And meanwhile, we established an insurance brokerage company, financial asset management in Austria, real estate brokerage, and the youngest part of my little group is Danube Angels. The topic and touching point with Ronald and the SeedBlink team. Since 2017, we run an investor network in the early stage arena, so to speak. We can come to more details later, but just as an intro, so far we have worked with 200 investors, financed close to 25 companies in 35 transactions, and keep on working and celebrating small successes. And of course, we also had our learnings and we had some failures in the portfolio, but I'm sure we'll have an opportunity to talk about this later on. So that's about the intro.
That was a comprehensive intro, Paul. The webinar today is obviously about fundraising and efficient fundraising. as they say in startup world, after fundraising is before fundraising and the other way around. So startups are inherently continuously fundraising. And it's important to understand a couple of basic mechanics and strategy when it comes to fundraisings. Today's webinar is about essentially special purpose vehicles, or say syndication of multiple investors, multiple angels, in order not to clutter your cap table. It's very important for various reasons, which we'll touch upon. There's various ways to do that. There's a trustee structure, there's real SPVs, there's a nominee structure, and so on and so forth. But it's very important to understand the basics and why this needs to be done. To give you a bit of a background, SeedBlink has over 150 portfolio companies, and almost all of them have been invested by SPVs in order for us to be able to pool the investors. Now, to kick it off, and having set the stage now with my short monologue, the investment vehicles that are used, how do they simplify the fundraising process and accelerate the investment process from your viewpoint, Paul?
I think there are a couple of aspects to this. The one, and probably most important one you mentioned before, is that you, ahead of new rounds, or most companies in this field at least believe they will be venture financed over the long run, and therefore it's important to keep the cap table clean. Venture funds don't like to see multiple names, or 30, 40, 50 names on the cap table. In addition, at least in the countries where we are mostly active, which is the DACH region and the neighboring countries from Austria, now including also Croatia and Romania, they still have a very, let's say, inflexible legacy GmbH law, like a limited company, where you still have the obligation of notary public and many other things, as opposed to the Baltic countries, for example, where you can establish such a limited company in minutes and digital only. But in our place of work, there's a lot of, let's say, bureaucracy involved, which makes it expensive, time-consuming for investors to get direct access. So that's why our way, and I believe it's a similar way as many other networks, including SeedBlink, is to go for a nominee structure, where a nominee, a dedicated nominee company, in our case based in Austria, would accept the subscriptions from the investors, pool the money, and then take part in the subscription of a convertible loan or straight equity, take part in the capital increase, being the legal shareholder and executing the corporate governance stuff, whilst the individual investor always remains the beneficial economic owner.
So this is...
That's one way how we work with it. There are other structures I know. For example, we pool everything under the roof of one nominee company. Other networks would establish one special SPV for each transaction. Also a doable way, depending on how many people are involved. So I'm not a lawyer, but the main legal difference in this can be that in a real special vehicle, the shareholders or the investors can become shareholders in the SPV, having, let's say, more direct rights, as opposed to the nominee structure, where they would close a nominee agreement and having implicit shareholder rights. So if lawyers are present, that can be an interesting discussion, whether this is very important or not. In our case, for our investors, it works, and it's a feasible thing. And of course, other structures involve angel funds, very common in the UK, for example, or also in the US. Let's call them the more advanced private equity markets. In the UK, for example, investing into an angel fund would also allow you to have benefit of the tax benefits of the EIS system and SES system, which is, I believe, one of the main triggers why this industry has grown so dramatically since Gordon Brown in 2004 established this. We are all in countries in the absence of such incentives. So angel funds, not so common in Central Europe, but also a doable way.
Yeah. And I think it's also looking at it from the founder's perspective. I mean, you want to be in the best shape possible for your follow-on financing rounds. And the best shape possible is you want to have as lean as possible a cap table. And instead of putting 10, 15 angels on your cap table, you want to go with pooling them into one entity and therefore one line on the cap table. As Paul said correctly, you can do it via SPVs. Quite frankly, this is how SeedBlink started. We have done tons of singular SPVs per investments, which is a tedious process and also a costly exercise. And we switched like 2 years ago to the nominee/trustee structure because, honestly speaking, in Western Europe, it's market standard. And it's important to understand for the investors as well. These structures are set up in a fiscally transparent manner. So the fiscal situation in case of an exit is completely with the investors. There's no taxes to be paid by the nominee or the trustee, very important. And secondly, the nominee/trustee on the cap table speaks with one voice on behalf of the investors. And why is this important? There is situations, and the background, historical background for these structures is there has been situations in practice where important decisions for a startup, like a sale of the company, were prevented or delayed because some investors were not reachable. They might have been traveling whatsoever. And according to the limited law in Austria, Germany, and Switzerland, most European countries, everybody needs to be heard and has a voice. And this is something that you can somewhat mitigate by having these nominee structures, because within the nominee, say you pull 10 investors, 20 investors, you can do a simple majority, even for these kind of decisions, which then the nominee speaks on the cap table with one voice. Very important to understand. And that brings us also to the next topic you already touched upon a bit, Paul, the governance matters. So decision-making, optimizing a decision-making, communication by grouping various angels into one entity. What's your experience there?
Yeah. So of course the nominee agreement gives a lot of rights to the investors, and in return a lot of obligations to the nominee company. One important part is the reporting, of course. That's mostly the simpler part. So we get the quarterly reports by the portfolio companies, and we make it available on our platform. More interesting is in the case of, for example, a follow-on round, where we, and I'm saying we as a nominee structure, have certain rights out of the investment agreements, like pro rata, pickup, and that can be kind of an exciting activity because we need to negotiate with the startup all the terms, or we need to accept the terms of the follow-on, VC, lead investor, whatsoever. Then we have to give. Then we would transfer the information to the syndicate members concerned and telling them, okay, there will be around at an evaluation of X, our pro rata is like this and that, and for this price per share, we are all invited to participate. Please tell us within the next week whether you want to participate. That's, let's say, the straight way. But then there is an additional feature to this. Not all of the 20, say, investors would be ready or liquid or interested to participate in such a round, which leaves a certain chunk which other investors in the syndicate can pick up. And then the number 3, if we want to make it very complicated, if somebody was not invested in this syndicate but is a Danube Angels investor, he could also pick up shares, getting exposure to a company he maybe missed 2 years ago. So all that is a lot of administration. On the other hand, it's very real life experience, not only for the nominee, but also for the investors, because they really take part in very important stuff. Some things, technical things, legal things, which are, let's say, no-brainers, the nominee or the trustee can do and will do. But when it comes to sale, when it comes to problems, when it comes to interesting new rounds, to down rounds, important changes to the shareholder agreement, things like this, the investors have a say, and we as trustee would then assume the role based on the let's say command of the majority of our trustees.
And that's the final word, the final phrase was important. So for the founders in the call, you speak with one entity, say the Danube Angels SPV, the Danube Angel nominee sitting on your cap table, or the SeedBlink one for that matter. You have a decision. On the cap table, this is one of your investors, but you know that behind this investor are pooled 10, 15, 20 angels. The voting on the cap table is addressed towards, I take the Danube Angels nominee as an example, but Danube Angels itself would back-to-back give this voting to its investors. But the beauty of it is they give investors a deadline. Let's say you have to come back within 1 week. If you don't come back within 1 week, your voice is not heard. Which means the case that I gave beforehand, if for some reason there is 1 or 2 investors out of these 15 currently traveling where they don't have access to their internet, then this doesn't sort of delay the process, because as soon as a majority is reached after a week, the SPV, sorry, the nominee can go back on the cap table and say yes or no. And this is very important. So this is a very efficient setup for decision-making and communication. And when it comes to reporting, obviously, I mean, we are using our platform almost since inception. You basically put your weekly, your monthly or quarterly updates there, and it gets to all the investors in the nominee. So this is how we are set up, and I assume Danube Angels as well. Talking about the legal and administrative complexity, and why would you think that angel investors prefer or should prefer these kind of investment vehicles, and how can they leverage them strategically as well?
One thing is, let's say, the amount of investment can be lower in syndicates, and most of us, or maybe I don't know, don't belong to the super rich, doing like 20 times 100,000 or 200,000 in startup investments. In our part, there are a couple of those who would use our trustee model as an administration tool, because they don't want to attend general meetings, they don't want to sign contracts in different languages and so on. So they sort of delegate this to the Danube Angels. But the larger part are people like you and me. They would invest like 5,000, 10,000, 15,000, whatsoever. And with those amounts, they would have otherwise no chance to get exposure to the startups. With the exception of the UK, so there we have models where even the cap table or the direct participation would be allowed by £5,000 or so, because the company's house is working so efficiently that it's no problem. But in our part of the world, we all would have no chance with lower amounts to enter or to get exposure to interesting startups. And that's the beauty of it. We have, out of the 200, about 15 who are investing a couple of times per year larger amounts, and they are happy with the trustee structure due to the reason, or for the reasons I mentioned before, so that they simply don't want to go through all the paperwork. They just say, okay, I'm pro, I will pick up some shares, please execute.
Yeah. And I would add to that, I mean, these kind of structures, these kind of infrastructures that we established, we have that as one of our service offerings. We have angels or founders coming to us and ask us whether they just can use our syndication vehicle, our nominee, and we're happy to provide that, because it's our bread and butter business anyways. What I hear quite often, and especially when, funnily enough, when international investors are involved, they don't like to go to notaries, because they know what it means. They're sitting there for 3 hours to get read the contract. It's annoying. It's a legacy thing, but it's going to be with us for the time being. And investors don't really like that, which is why they often use POAs, power of attorney, so they don't need to go there themselves. Here's the good thing. Given that under a nominee and the trustee setup, although the investors are the economic owners of the shares, they are not the legal owners of the shares, because the shares are held in trust for them. They don't need to go to the notary. They conclude the trust agreement with the trustee, let's say the Danube Angels trustee, but the Danube Angels trustee is the entity that needs to show up at the notary. And this is very important, because that means there's no POAs required, there's no showing up at the notary. This is a big plus, especially in German-speaking countries. And it's a big hurdle and a pain, quite frankly, for international investors, so bear that in mind. That smoothens the process. That brings us to the next point, i.e. the benefits of the nominee trustee investment vehicles. I just named one, but there's more than that.
Yeah, so I would say it's a win-only situation, both for investors as well as for the startups, because why would startups try to attract angel investors? Of course, discussion starts about money because they need fuel for their further growth, yes. But on the other hand, there's much more to angel investors than the sheer money. And whether an investor would become part of your cap table directly, but also in our case, when we pool investors, we also connect them, those who could be interested potentially, who have something to offer with new markets, with advisory, with mentorship, with whatsoever. You still would have some kind of a collective benefit out of the syndicate. It's not like, it's not like that we will connect you all 15 with the founders, but we know who are the investors. We actively ask them, do you have maybe some leads for this company where you were invested? Let's help them to find a new client in Bavaria or in Czech Republic. And that's kind of working quite well. So you don't lose out on this connection and some kind of a larger pool of mentors and people who know you and want to support you.
Exactly.
Notary Public, yes, I can only double sign this. I'm spending a good part of my time in multiple jurisdictions. Okay, it's kind of the law, and I think sooner or later there will be some enhancement in this. But still, for example, Croatia, very much monarchy style, limited law. Austria, Germany, it's known. Okay. One disadvantage for investors, so I don't know how the group today is compiled, but also a word in the direction of investors. When you invest, it's a special form of nominee structure. So you give us the order, you will take part in the capital increase of company X. I'm going to invest 10,000 euros. Please do this and that. So that's this kind of nominee structure. If you want to transfer your shares, there are some limitations to this. So from out of the trust agreement, everything is possible. Currently, there is no, let's say, no secondary market for this in the way that you can see it. I know that there are a lot of ideas and a lot of new initiatives, what we as Danube Angels yet do not have, but I'm sure there will be secondary markets in the true sense of the word will be coming up. But if, for example, you want to or you need to transfer your stake to somebody you know, and you find somebody you want to share the risk with, then there are some, let's say, some administration involved, not bigger than if you were a direct shareholder, because if you were a direct shareholder, then you would have to go to the Notary Public again. So that's not the case here. But I'm saying that a trustee structure means one additional layer in the ownership structure. That has many advantages, I think much more advantages than disadvantages, but nevertheless, it's a certain structure we all have to deal with.
Yeah, and I would like to add also taking my founder's hat on a bit now. It does make a lot of sense to keep the cap table clean. It does make a lot of sense to pool your investors, especially smaller one, under one entity. That being said, there is situations, and they happen quite often, where startups attract a particular investor, a particular angel, who they want to be on the cap table explicitly, regardless of the investment amount, because he has a signaling effect. It might be a key opinion leader in a certain industry. The startup, the founder would like external people to see who is sitting in the cap table. They want this person to be visible. So it's not an either or. You can be a combination of both, but the general advice is pool the investors that you can pool in order to keep the cap table lean, and take the signaling investors on your cap table if you decide to do so. Bringing us to the next point, the role of the lead investor. Maybe I start here. So usually when an angel syndicate is forming, it's mostly driven by a few individuals who are taking somewhat of the lead role, in a sense that they are sourcing their investment, they are discussing with the founders, maybe even the terms, and taking a bit of a lead role in the investments themselves. But then again, when it comes to the actual investments, they still present themselves as a syndicate. There is syndicates without a clear lead. There are syndicates with clear lead. In our case, in SeedBlink's case, and in Danube Angels' case, I guess it's often a situation that we are taking implicitly the lead role if there is no investor that basically raises his hand. What's your experience here with lead investors? Oh.
So let's say we have both structures. In the very early days, we mostly assumed the role of the lead investor. And in some cases, we've been, as Danube Angels Group, the only investor of a particular round. That changed over the years. So in many cases now, there is already a lead investor in place. And we kind of play tandem and work with them. We also work with Gateway Ventures, as Ronald knows. So they have a condition that there is a kind of prominent lead investor, a venture fund before funding. We don't want to limit ourselves to this model. So conclusively, a lead investor gives confidence to our group of investors. That's for sure. On the other hand, it lowers the flexibility of the investment terms and of the, let's say, of the launch of the corporation. In the case where we assumed the role of the lead investor, it was kind of a very direct interaction with the founding team, where you're taken very serious, and then they listen to your advice or your ideas, and they're very responsive. In other cases, when there was let's say, a larger VC fund as the lead investor, then he would be the predominant contact person for the founders, and all other angel groups around it would have a minor role. So maybe that's the bigger difference. So from our side, we are open to both ways.
Yeah, the same goes for us. I think it's fair to say that in most cases we are implicitly taking the lead role, but the lead investor role, talking about inside our nominee, obviously, because quite frankly, there is advantages but also drawbacks for lead investors. I have seen situations where an angel syndicate that had a dedicated lead then relied a bit too much on this lead investors, in a sense that he's going to do the job anyways, I'm going to do some free riding. And if everything goes well, everybody is happy. If there is an exit, everybody's even more happy. But if things go sour, and they will go sour, then the finger pointing can start. So that's then an unpleasant situation for the lead investor, because technically he's just trying to do his best, but the other investors, not having done anything, maybe, I'm exaggerating, might start point fingers if things go sour. And that's a situation you don't want to be in as a lead investor. So there's pros and cons. And there's, quite frankly, there's some liability attached to that, right? So if you were to act grossly negligent or willful misconduct, these kind of things that you can't prevent legally, then you might be in an uncomfortable situation, which is why we, as a professional servicer of our nominee, we're often taking this role and taking these liabilities.
Yeah, maybe I can add one sentence to this, because most of the audience today will be new to Danube Angels. Part of our selection process and why we actually started Danube Angels was that my two partners and I want to get exposure to this asset class. So part of the, we are all getting dozens of applications for finance, of course, and then we have some selection process in place. But ultimately, my two partners and I have to say, okay, we are going to put our own money into this company. And if not all three are willing to do it, then it's no deal. So implicitly, for our syndicate, we are the lead investors anyway, because we are the first to commit capital, and that's a matter of trust, which is perceived quite well. So maybe that's just as an additional input. I know some investor networks are working like this. Others are more, let's say, on the platform, really just matching idea. So we share definitely all the risk.
Yeah, I just see there's a couple of questions in the Q&A, or there's one at the moment. We'll come to the Q&A once we are done with our basically dialogue here. We have two more points to tackle, and then we go into the Q&A. So bear with us. We're talking about the long-term advantages for founders when preparing for future funding rounds. I mean, we touched upon this topic already between the lines beforehand. a lean cap table is just utterly important for getting institutional money, meaning VC funds for the bigger rounds. VC funds don't want to talk to 15 different people on the cap table. It's just a complex and unnecessary hassle, and you want to avoid that. So the cleaner your cap table, the higher the chances. On the other hand, or the flip side would be, if you, excuse my French, screw up the cap table too early, this can present the poison pill to your company. And that's the last thing you want to have. So you can have the brightest idea, the brightest product, the best traction, but if your cap table is too cluttered, it's going to be an issue. And you want to avoid that at all costs. So this is one of the advantages, or the key advantage. Anything I missed here?
No, I think it's a clear red flag. I'm not always in let's say, in agreement of the behavior of venture funds. Sometimes we have a lot of discussions about all this, because on the one hand, they want clean cap tables. Yes, fine. So if so, then they should give liquidity to early investors and clean the cap table partly themselves, which is very common in many countries, especially in more advanced markets. In our part of Europe, it's rarely done. So the VCs would mutter around that there are some investors, and what should we do with a 3% stake of this strange Danube Angels triand or so? Say, okay, so then just give us the money back with some discount, and good luck. So no problem. We are investors for a certain time. And the more such earlier exits we could generate, the more our investors could reinvest. So that this kind of this magic circle has got stuck a little bit over the last 2-3 years, because there haven't been so many and meaningful exits.
That's very true.
Have a look to last sentence. Sorry, have a look to Estonia, for example. It's a small market, but a couple of unicorn and a couple of exits, and now like 200, 300 former employees, former founders, people who got stock options, they are all the time reinvesting now already the third or fourth time. And that makes an ecosystem. And I think we need more of this.
You mentioned the point cap table cleanup. It's obviously one of the services that we provide as well, because legally speaking, technically, it's doable. You just say, okay, there is, we take the, I don't know, 10 smallest investors on my cap table and we put them into an SPV, we put them into a nominee or trustee. That's doable. The challenge, though, being, from my personal experience, doing this on a daily basis, if investors are on the cap table once, and let's take the smallest 10 investors on your cap table, going back to them and telling them, listen, because we need to get follow-on funding rounds, we now need to pull you into a vehicle, always comes along with discussions. You need to explain everything. You need to make sure that they are not put in a worse position, and so on and so forth. It takes time. It takes time and a lot of convincing. So you want to avoid that situation. It's doable. It's absolutely doable, but it's a bit of a tedious task, quite frankly. Coming to our last point, what happens in the case of an exit? So that's obviously the situation when there's happy faces all over the place. What happens within the nominee? What happens within the trustee?
Yeah, so in our case, it's very simple. So we get a term sheet or whatever documentation is available, and we would forward it to the investors concerned. Then they have a couple of days to think about it. Some would call us and then want some maybe more information or so. Mostly they're interested what my partners and I would say to the transaction, and then we collect the answers. If it's a positive, or let's say if it's above the invested capital, then the agreement can be taken as like sure. We had one of those in the case of Danube Angels. I had one on an investment outside of Danube Angels. But if there is any kind of profit, then the investors will agree. We would get a majority of the syndicate, and we can sign the agreement. Once the purchase consideration will be received by the nominee company, because we would sort of be the bridge, then we would forward it to the pro rata to the investors, depending on the amount they had initially invested. And then the tax point Ronald mentioned at the very beginning comes into place. So the nominee structure has no tax, let's say, character. and so the tax obligation is with the beneficial owner, so is with the investor.
And that's very important because fiscally transparent means tax transparent structure. So if you were an Austrian or German investor, you would need to pay capital gains tax on your profit. But this is your business at the end of the day. You get the full 100% of the money out, and you need to file it in your own tax filings. If you're based in a different country with a different capital gains tax regime, then obviously different rules will apply. This is why most of these structures, almost all of them, are in this tax transparent manner, because it would be a hassle for the nominee to take over this tax topic as well. It would just be too complicated, quite frankly. Okay, so having touched upon all the points now and having a couple of questions already in the Q&A, let's go straight to the Q&A. And the first question is, this kind of investment is suitable only for the EU market. I'm from EU, Romania, but currently located in Dubai. And I want to start pilot of my project in GCC first, then scaling globally. So he is asking whether this investment is only suitable for the EU market. I'll let you go first, Paul.
I would see no restriction to the Gulf countries. Nominee structure is well developed in our part of the world, but also in the Anglo-Saxon jurisdictions where a lot of, I think, has been transferred to the Gulf region, is quite common. So, for example, I can only speak for Danube Angels. So we would have no problem to pool investors from Dubai and then to scale into Europe. So our nominee structure would allow this.
Yeah, I can say the same for us, and we have used our nominee in the US, in the UK, and I believe very selectively in the Middle East as well. So the next question is a fairly long one. Considering the parent trust is based in Austria, but the implementation and operations are carried out in other regions like Romania, what are the potential fiscal implications in terms of transfer pricing considerations between the Austrian trust and its subsidiaries, tax liability distribution between Austria and the countries of operation, potential double taxation issues and available tax treaties that might mitigate these concerns, and VAT implications for cross-border transactions? 4 points. They all go along the same.
I think all 4 can be answered or have been answered already. So the tax obligation in our case is with the investor. So there is no transfer pricing, there is no tax liability in Austria, apart from when Austrian investors go with us. The cash flows are between the investors and the nominee structure, and then the nominee structure into the startup, into the investee company. So there are no corporate income or VAT things concerned. So out of the nominee structure, there are no such complications or implications. The only thing what, of course, is, for example, if this company was in Romania, actually what we are now just closing, the first one, if we, as Danube Angels, as intermediary, we invoice some capital fundraising fee, then of course it's part of the reverse charge regime and things like this. But that's normal, let's say, business interaction, but no special things with the nominee structure.
Yeah, I mean, we should highlight maybe one point. So it seems to be because Paul is based in Austria, I'm based in Austria. For some reason, both our nominee structures are Austrian legal entities, but there's no particular reason why they should be Austrian. They could be German, they could be Estonian, they could be in any country that allows for that. They could be even British, to be honest. It makes it easier to have an EU entity, and given the fact that historically SeedBlink has been present and Danube Angels has been founded in Austria, that's why it's an Austrian trust. But there's no particular reason why it should be this country, just to be clear on that. Okay, next question is, does a nominee structure make it easier to accommodate this similar participation by syndicate investors in subsequent rounds as opposed to an SPV structure?
Yes, so answer is definitely yes. We had this situation with an investment in the UK. There have been now 3 or 2 follow-on rounds existed. So the initial investment and 2 follow-on rounds, but not all the investors from the first round took part in the second round. So this was kind of, there was a shift in the percentage of the syndicate. And then in the third one, another group, some from the first round, some from the second, some in all. And the good thing in the direction of the startup is it doesn't matter. There is one percentage, one number of shares, which our SPV holds. And behind all this, it's our, let's say, our Excel game.
Yeah. I agree. And the thing is, I should have mentioned before when you talked about the secondary market, I mean, obviously, for the ones who know us, SeedBlink has a secondary market bulletin board where investors can actually trade to a certain amount their shares within the nominee. So inside the nominee, there is some share trading possible if legally and regulatorily allowed, which means that the investor cohort within the nominee might change and might look slightly different in the next financing round. And the point is, it's important you always need to take a look from the cap table. If the cap table says, okay, Danube Angels nominee can have another X amount in the current round and a certain amount of shares, then this goes for the nominee. What happens within the nominee, it can be non-pro rata. That's very important. It's trickier with an SPV, quite frankly. Next question is, what has been your experience with foreign investors who would like to invest in a startup market where the currency is volatile? I'm not sure if I understand that correctly, because
probably the currency risk in general. Of course there is currency risk, yes. For example, we have investments in Czech crown or in Romanian lei and things like this. But as for us, we invest only in equity instruments. So only taking part in convertible notes issuance or straight equity, which is an asset per se, and currency fluctuations should be reflected in the ultimate exit price. So it's not like other platforms who are working with, let's say, mezzanine loans or some other structures which are more fixed income like, which have a duration of 18 months. And by then, for example, Turkish lira can be somewhere, and that would be a big risk. But in our case, it's purely equity, and therefore the currency fluctuation is not of such importance.
Yeah, and I mean, to add to that, we are doing mainly three currencies, essentially. It's euros, it's US dollars, and it's our home currency, Romanian lei. But quite frankly, even if you look at the more immature markets, you look in more Eastern Europe and to some extent Africa, you want to go for hard currency. That doesn't mean there's not an underlying FX risk, because local factoring will be done in the local currency, but the international money always goes in the hard currency, or in most cases. What is your advice for a startup without any prior experience, only having the company registered, no minimal viable product, and needing funding to create the product? I'm having a hard time differentiating between events that require the startup to have activity and those that are open to beginners. Okay.
So for our case, we are starting to consider investments for our network when the company is generating revenue already. So for the Danube Angels, it would be too early. And my recommendation would be more to have a look to accelerators and venture studios. There are a lot of resources and a lot of events for the very early stage, especially for finding the MVP. So I think such companies would be the right place to have a look.
Yeah, I would agree. And to give some market intel, because it's our daily business. I mean, make no mistake, the fundraising market is still a bit challenging these days. 2023, 2024 have been challenging years for founders in general, especially for early stage founders. Investors are getting more selective, especially in the early phases like pre-seed startups, and they want to see more sort of milestones and tractions even in these early stages. That's just a consequence of the heydays of 2021 and 2022, and up until today, it's still the case. I'm not going to lie to you. So the more you can show to investors, the better. And what used to be criteria for I would say early seed startups are now even applied to pre-seed. That's at least what I see in the market. The question is, what's next step? Okay, I'm not sure what question this relates to before. I'm afraid I can't answer that one. So I would rather go to the next one. I'm aiming to raise $1.5 million to support 8 new promising founders Web3 ventures by offering our services, strategy, software development, UX, UI, as well as financial support for go-to-market strategies and user acquisition. Based in the EU, what do you think is the best approach to fundraising for this venture?
Mm-hmm. Well, I would say, unfortunately, I have to answer like a lawyer. It depends. And I think the main point you have to look at is from whom are you planning to raise? Like, because there are a lot of, we are well regulated in Europe, and depending on who should be the investors, I think then should be the structure. If you have, like, let's say 5-6 friends trying to go with you for this project, then it can be a simple limited company basically anywhere in Europe. There would be, I wouldn't see a limitation. If you are, for example, on the other side of the spectrum, you are going to raise it from the crowd with 10 euro chunks, then you will need a provider who is doing the platform, doing the administration work, and who will help you with the regulation. So I think it depends, but the geography of an SPV doesn't really make a big of a difference.
Yeah, I would say so as well. I just learned that the next the question we had before, what's the next step, was related to the UAE, the Dubai question, where we said there is no particular hurdles. I mean, I guess the main message was that if you want to fundraise with if you want to make use of any EU-based nominee structure, then you're free to do so. What would be the next step? Well, obviously, speak to people, speak to investors, try to get commitments from investors. And once you have them lined up, feel free to reach out to us or to Danube Angels, and we'll be happy to help you with our existing nominee structures to get the syndicate set up in an efficient way. I guess that would be my answer.
Yeah, definitely. It always starts with the, let's say, the presentation of the project, and to make it, let's say, tangible, it's good to have the first investors on board. Otherwise, it's just an idea or a dream. So yeah, feel free to reach out. So until now, we did not run the nominee structure in the Gulf states, whilst we have a couple of investors from there who take part in our syndicates. So this direction is proven and is no problem. But of course, anyhow, get in touch.
Exactly. Any more questions from the audience? I think we tackled quite a few. That was a lively call then. If there's no more questions, I would like to thank Paul for your time. Very insightful, much appreciated, very educative, at least for me as well. And always a pleasure to talk. Everybody, thank you very much for your participation, and looking forward to see you all in our next webinar, which is coming soon. Take care, everybody. Ciao, ciao.
Thank you. Bye.